Oh, it is very important. If you look at the ISM decline in December, in the commentary that came out from companies, it was clearly saying that a main worry was everything that has to do with the trade war, tariffs, supply chains, China. So in that sense, even from an economic perspective, this is a very, very critical issue for the outlook.
Are you surprised it hasn't impacted the U.S. economy as much as it's impacting other economies abroad?
It's true that abroad we are definitely seeing some slowing, and some slowing that's harder than what we've been seeing in the US. But remember that companies who listen to some of these uncertainties and adding to that the shutdown, debt ceiling, the fading positive effects of the corporate tax cut, you actually have a fairly solid cocktail of things that are hanging over the market that are just uncertainties that need to go away. So in that sense, it's not surprising that businesses that plan out in the future are actually paying attention to this.
Jack, for all the negative macro news we've had out of the rest of the world in the last week or so, I guess it's a little bit of a surprise we haven't had any individual days of big dollar gains. But when you put it all together in a sort of stealthy type way, the dollar has gained a lot for the week as a whole.
Well, if you listen to the comments that were put out by Deutsche Bank this morning, I think that kind of summed it all up. I really put it into three categories. You're talking about trade tensions, you're talking about global slowdown, and then we're talking about Brexit. And let's tackle each one of those. You know, trade tensions can be relieved overnight. Let's keep that in mind. I mean, everybody's talking about trade tensions, but listen, if protectionism is going to be embedded in foreign policy henceforth, then yes, then we get out of equities and we forget about it a little bit. But that's not the case here. This is a negotiating posture we're taking. As far as the global slowdown goes, guess what? All of that is relieved if indeed we start to see those trade tensions relieved. And then Brexit, after being in the UK for a couple of weeks, I got to tell you, Wilf, it is a political mess, but it is an economic Y2K. It is a non-event. So if that is the reason people are selling equities, then they've got another thing coming. They'll be buying them 10% higher, because that's exactly what will happen once we see these trade tensions relieved.
That's not what the economic forecast
I was about to say, I hope you're right. I'm not sure that it's consensus.
Not what the CEO of Expedia told us today. He said big drop in the UK. Sam, taking it back to U.S. earnings, where are we so far in the season in terms of earnings growth for this quarter and looking forward?
Well, looking forward, we're finding more and more reason why we could be approaching an earnings recession. When we started this quarter, expectations were for a 6.5% gain in fourth quarter results. Now that number is 3.4%. A high for the first quarter estimate was around 8%. Now we're in negative territory, and the second quarter is now up less than 2%, whereas it had been close to 8 as well. So again, the question is it because analysts are ratcheting down their expectations because of the trade issue? And if that gets resolved, then maybe we see a ramp up in earnings expectations along with the prices in the market.
But I mean, that framing, Sam, you just gave us in terms of the earnings was pretty negative. I mean, are you surprised we've held up so well where the market is, given that we had such a big bounce back in January?
Yes. I can't help but think that those who believe that, oh, this trade situation will be resolved any minute now, are like teenage smokers. You know, they think, oh, I'll be able to stop in time before I get sick. Well, you know, sooner or later, if we keep smoking, or sooner or later, if we keep going through a trade war, it will have a material effect.